A very warm good morning to all of you. So now, uh, cost of capital is one such chapter which is going to make a base, which is going to make a base for almost everything which we are going to see further in our course, right? Now, I have to ask you two things. Well, I have to ask you two things. Now, if you would have studied basics of economics, right, in your 12th, 10th, 12th, whatever you would have done through, there is something called as microeconomics, right? Yes, I'm just taking you through back so that you can understand this. Now, if you have understood this whole FM, so I have to take you to a basic of economics that is called microeconomics, right? I believe already most of you have gone through this microeconomics in your 10th, 12th, and also in your foundation levels of exam. Let us take a simple approach of how the microeconomics will work out. Microeconomics is all about businesses independently which make a product or a service. Yes, they make a product or a service and they incur a cost, right? In order to make a product or a service, they incur a cost. Are we all okay with that? Right? Take up any example, any business for an example. In order to incur a product or in order to have a product or a service, they incur a cost. Are we all okay with that? Yes or no? Yes. Please type S in the chat box if you are okay. Yes, only yes. The why yes, इतना भी हम आपको कष्ट नहीं देंगे. Only yes if you want to type, right? So they incur a cost. That cost could be in the form of factors of production. I believe you know what are factors of production. That is land, labor, capital, and entrepreneur skills or organization. After they have produced goods or services, they will sell that, or they are going to make a sale of it. They are going to give it to the other people for a selling price, right? They are going to fix up a selling price. They are going to fix up a selling price for the product or a service. The difference between, right, the selling price minus cost of product. Can somebody tell me what does this will be? Yes, selling price minus cost of product, what it will stand for? Very good, it is profit. It is profit. Are we all okay with this? Are we all okay with this? Yes, this is a very basic understanding of microeconomics which I am trying to give you, right? Are we okay with this? Now, using the same concept, right? Because this is a universal concept. This is a pretty much universal concept. Using the same concept, yes, we are trying to do business. We are trying to do business. Yes, the same business which was engaged in the product and service, and we are trying to manage. We are trying to manage money / finance for the business, right? Yes, we are trying to manage money / finance for the business. Let us take an example, sir. Now, what has happened, sir, in this whole scenario? Every business has to, in order to survive, meet out their monthly and ad hoc expenditures. Yes or no? So they have to meet out their salaries, they have to meet out their rents, they have to meet out their all other cost of services which they are utilizing. Yes or no? That's a basic thing. If they are not able to meet out that, can they function? Like suppose for an example, tomorrow a business decided that will not pay salaries. So how long employees will come to work, and if employees will not come to work, how the business will function? Perfect. Yes. Yes. Similarly, it will happen with all factors of production. So business has to make a payment for all the factors of production. In order to have those payments met on due dates, so he should have an inflow of money. So that inflow of money can come from selling products, can come from raising money from ourselves, right? Can come from raising money from the market, can come from borrowing it from the lenders. There would be different sources. So now financial management, to be as a layman, I'm just telling you this as a very layman, right? As a very layman, please understand, if this financial management is just nothing but a management of inflows and outflows of money. That is management of inflows and outflows of money. Are we okay with this? Yes, this is the whole part of what is the financial management. As a layman, I'm telling you. If suppose I'm not able to match my inflows, and in case if my outflows are more than my inflows, what would happen, sir? If my outflows, the payments which I'm making are more than my inflows, then what would happen? Just tell me what would happen. If my outflows are more than inflows, what would be the problem, sir? Yes, loss is there obviously, but at the same point of time, business will not be able to function. That is what I'm trying to tell you. So financial management is pretty important, not only for the profits and losses, but also for the regular ongoing process of or making the business go on for a pretty long time. That is how the financial management is very much important. Now, at the same point of time, in order to do this process, in order to do this process, so always businesses have to do what? Has to arrange money, right? Businesses have to do what? Businesses have to arrange money. So how do they arrange money, sir? How do they arrange money? If you can just tell me, how do they arrange money? They arrange money through sales, through loans, right? Through certain hand loans, right? Sundry creditors, right? Yes, or deferring payments. All this sort of things we take care. Yes or no? Yes or no, guys? Please tell me. Yes. Just type yes in the chat box. Is this the way we raise money? Is this the way we raise money, right? We either defer payment. Suppose I have to make a payment to you today. I say, यार आज पैसे नहीं है, एक काम कर, तो अगले महीने मैं पक्का दे दूंगा. Because we have a good relationship, you might agree. First thing. Second thing, I need to buy raw material in order to produce, but I don't have money to buy raw material. So what I will call up my creditor and say, please give me a credit, charge me little extra. Instead of selling it from 100, you charge me for 101 rupees per kilogram, but you give me a credit. Or I will might go and take up a hand loan from somebody whom I know, my relatives and all, for a very short span of time. Or I might end up taking loans altogether, or I might take up put up my own money. Yes, these are my sources of money. These are my sources of money. Yes or no? This is a general business will have a source of money. Correct? Correct? Yes or no? Yes. Now, of this sources, self money is called equity. Self money is called equity, right? If you take a small special purpose money, like if you have to build up a one particular project and you do not want to take a loan, only for that project you might ask your preference shares to come in. Yes. Or preference share is somebody who is who does not want to give you as a loan, but at the same point of time wants a fixed amount of return for his money. So preference shares. And the last one and the most used one is a debt. Yes. So you have a equity capital, you have a preference capital, and you have a debt capital. Yes. Yes or no? Yes or no? Correct. Correct. Are we all okay with this? So this capital, whenever I bring this money into the business, do I have to pay a cost? Do I have to pay a cost? Yes, do I have to pay a cost? Tell me, sir, do I have to pay a cost for all of this? So three sources of capital which we are taking in little detail. Yes or no? Can I have any of this capital without having a cost? Yes. Would you get a loan without making payment of interest? Yes. Would you get a preference shares without demanding a preference dividend? Yes. Would you get an equity shares? Can you put up your own money without having an opportunity cost? Yes. Tell me. So always capital is linked with my cost. Capital is linked with my cost. Yes or no, sir? Capital is linked with my cost. Now at the same point of time, what I will do, I will use this capital in the business, yes, and generate inflows. And if this inflows are more than this outflow, then what would I have? If my inflows are more than my cost, then have profit. Yes, as we were having a profit in a normal scenario. Are we okay with this? Sure, sir. Are we okay with this? Pretty simple explanation which we are having. A very pretty simple explanation which we are having. Yes. Now, as the name of the chapter suggests, please see here, as the name of the chapter suggests, what does the name of the chapter suggest, sir? Cost of capital. That means this whole chapter is about calculation of cost. This whole chapter is about calculation of cost. Are we okay with this? This Are we okay with this? I need 100% participation from all of you side and tell me, are we okay with this? Yes, can this whole chapter represent calculation of cost? So this is a pretty simple introduction of the chapter what we are going to learn about, and then let us go under little more details which we have one after the another. So there is one more interlinked chapter to this, that is called capital structure. So that introduction we will take it when we start that, right? So we are just going to learn the calculation of cost in this chapter, and the next chapter we will learn the arrangement of those capitals. That's it. Yes, are we okay with this? I want you to just write it down so that we have a small explanation which is registered in your head, and after that we'll move forward. Yes.